Hello and welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing you to a conversation with Market Guru. Before I introduce you to our guest today, let's first understand the premise of this conversation. Last year has been a volatile year. First half, we saw a lot of correction, a mild correction in Indian equities, a greater correction in the global equities. We then actually saw a bit of recovery over the last 3-4 months in the equity markets. We also saw a rally in the gold. We saw a dip in the crude. We saw a strengthening Indian rupee in the last 1 month. Looks like there has been some return of interest in the foreign equity inflows. Domestic inflows have been very, very strong. So now in January, at the start of the year, when we are also actually expecting the budget, the question arises how we should be looking at 2023. Should we be looking at sectorally? We should expect a better year. And to decode all of that, now let me introduce our guest, Mr. Andrew Holland, CEO of Avendus Capital Alternate Market Strategies. Andrew, welcome to the show.
Thank you, Piyush, and it's always a pleasure to be here. Thank you.
Thank you. Now, first question, and I know you track global markets very closely. So I think let me actually first get your views on the global markets, where we are standing right now. Before actually you answer it, a couple of pointers here. European markets have improved really in double digits, almost 10 to 15% up over the last 2-3 months after a very sort of a bad first half last year. We have seen recovery in the euro. We have seen some mild gains in the USA markets, very strong gains in a couple of beaten down Asian markets. So how are you looking at the global equity markets?
Yeah, it's still a little bit tricky, confusing. Very many variables there. But I suppose we're coming into the year on actually not dissimilar to kind of coming into 2022. In 2022, Piyush, you remember, is all the debate was, the Fed saying inflation's transitory, the market saying no, it's not, and we know the market was right. And coming into this year, the Fed saying higher for longer, over 5% terminal Fed funds rate, market saying no, that's not going to happen. So you're going to fall into three camps: stagflation, recession, or deflation. I think we're going into the deflation recession camp. And I think some of the figures coming out now from the US is showing that the kind of aggregate demand is starting to fall, and that would lead to kind of lower inflation. Obviously, weaker jobs reports going forward. So that kind of lends itself to the pivot happening, in the US. And across in Europe, it's been a much milder winter than people were expecting. So if anything, gas prices will continue to fall. So again, inflation should look to be peaking. So we think inflation's peaking at the moment. Now, in the very short term, obviously the reopening of China could just kind of force commodity prices up in the very short term till some of these demand shocks start to play in. So that's what we're thinking. We think the Fed will go on pivot sometime in the first half of this year. But the markets might want to try and play that game, a lot quicker, which is probably why you're seeing such a sharp revival in the European markets and a weaker dollar, because obviously, interest rates will have to fall at some point going into the second half of 2023-24. So that's the kind of scenario we're looking at now. Within that, it's all data dependent, which keeps market volatility quite high, and obviously you have other factors like what's happening in Japan, which will play at the edges. But remember, Japan has been a source of cheap funds, going into global markets for some time. So that's something we have to keep an eye on too. So it's just a new factor which we weren't baking in up until the back end of December.
Yeah, that's interesting. And when I look at that and when I try to simplify it for our viewers, the question also comes in, if interest rates would have peaked and perhaps that would be actually getting chased as a precursor to the sort of rally which we are seeing, is the debt outperformance also a possibility? And when I look at the institutional flows, should the viewers, the investors in India should they also look at a possibility that perhaps they could also look at some shifting of flows into the debt market and less of the equity market, and that could be a debt rally, or the flows are so strong enough that both sectors could get the money?
It's a great question, and actually we've been seeing that happen. I think more of the high net worth individuals have been moving money more towards the debt markets because if you can buy into some of the either gilt funds or mutual funds which benefit from lower interest rates going forward, then you're kind of tapping in a higher yield of 7-8%. With the prospect is if interest rates do fall, of getting capital gains in that. So I think for the first time, usually maybe a year or so, you've got a competing asset class with equities, which is giving you good returns, right, and more safe returns from an equity market perspective. So I think a lot of incremental money is moving into debt, but it's not to say that our equity markets won't perform. One of the things we talked about with you over the past year is, once the Fed goes on hold, is where will people put the money, and they'll look for growth, and growth is going to come from emerging markets, that's for sure. But that's become very consensus. So India will get some flows because of that, but maybe not as much as we would hope, because our valuations in the Indian market are quite high compared to other markets like, say, China or Korea or Taiwan, which were beaten down very heavily last year. So I think that's, we might see a kind of increase in our markets. But I think, and I'm sure we'll talk about this later, it's the themes that you need to be looking at to make good money in the equity markets this year. I don't think looking at the Nifty is probably going to be where you'll get the best returns.
Absolutely. And I want to touch this point. You just touched upon it before I go to the sectors. Is that I was looking at the sort of index piece for a couple of Asian markets. You took the names, whether it's Korean markets, Taiwanese markets, Singapore, India, and it was very evident that we were sitting atop the pile in terms of the valuations. When actually, and you talk to so many foreign investors, when they're looking at India, are they really looking at the index P, or they're really looking from the sectors and the investable themes? What is their view right now?
So if you look at the the kind of the flows into India, a lot of it is through ETFs, passive or emerging markets. So there's very little direct money that comes into India. It's a small amount, considering the amount that we do get. So you've got to say, if you're an emerging market, you receive some money, emerging market fund, you receive some money. It's in your allocation. Would you, India's got a weightage of 16-17%. Maybe you're going to say, I'm going to put money there, but maybe I want to put only 12% weightage, and I want to put more towards Korea and China, because that's where, if global growth is going to pick up, then these are the countries which are going to have the operational gearing for that. Less so India. So I think that's what's going to happen. We will get flows, but probably it'll be a smaller percentage compared to other markets.
Okay, so that's again basically a choice on the valuation here. From there, before actually we talk on the sectors, let's also discuss on the budget, the sort of big event, the headline event. We always discuss about it every year. What are your key expectations from the budget? And are you expecting the union budget to really provide any sort of major levers which can sort of attract the attention of institutional investors either side, outside the border or within the border, and what the really government has to do for which could be sounding good for the investors?
So, Piyush, we've talked about this many times over the years, is that the expectations of the budget are probably always higher than the actual reality of it. So unless there's any kind of shocks on the tax side, negatively or positively, then what would you want the government to do? Now, if you remember coming into the back end of last year, and one of the things you mentioned was that India was standing high, compared to other markets from either a return basis or the sentiment. So India is doing some good things, right? So we just want to continue that, maybe more incentives towards getting foreign companies to come and set up manufacturing or services, which will be an opportunity, to move away from made China or get security of goods and services. So I think if we can continue to play on that theme, I think that's always, good news for bringing, players or companies into India. Because at the end of the day, we can say that the government can do this and do that. But, when you have, 450 million, millennials, Gen Z in India, we know the growth is going to come from the consumer going forward. So, that's a long-term thing that's not going away. So as long as we can continue to, kind of keep the growth rates above, 5-6%, I think India will continue to enjoy its day in the sun. And if you can just, get more foreign direct investment, then I think that will open up the doors, for this sentiment in India to continue to build. And, if you look at the electronics industry, it's probably one of the only industries which is still, getting net growth in exports. So, if they can build this electronics industry, not just for India, but for exports as well, it's a huge, huge market. So I think these are the kind of things I think investors will get more excited about, rather than, anything to do with capital gains tax, unless it's, positive or negative. I think they'll continue to come to India because of the long-term growth stories, not because of one budget.
I know you like manufacturing, and I'm going to ask more questions on that. But before that, just one short question here. On the capex versus consumption, in the budget, what are actually you're looking for? A slightly more higher allocation towards the capex, or you're actually expecting some measures to really boost the consumption? Which way we should be really happy?
Yeah, I mean, capex should continue, but I'm hoping that some of the things we'll talk about will mean that private capex picks up as well. So, as long as the government's continuing with its, capex towards, road, bridges, and so forth and so on, I think that would be the good news. Plus, incentives to get manufacturing in certain areas going. I hope it's not too populist, because the market never likes that too much in the very short term. But I think when something's working, I'm not sure you really need to kind of change it so much. So just continue with what you're doing, I think boosting consumption. If me and you try and get a hotel or an airfare these days, we're thinking, wow, that's a lot higher than it was, a year ago or even pre-COVID.
I agree with you.
So consumption's there; it's picking up. But obviously, there's more and more things that the government can do to help in the rural economy, and I'm sure they will try to do that.
Right, and from a sectoral point of view, what are you preferring right now? Which sectors are you looking with higher interest? Which are presenting to you with more opportunities?
So I think there's a our theme generally is that global capex is going to pick up. Led by governments, obviously, to secure supply, and if they don't, then corporates will see there's an opportunity, so they will jump in there. So I think it's a combination of that. But I think there's two areas which will definitely see a lot of spending, and it's nothing new: defense spending and renewables. I mean, that's going to be a global kind of capex cycle that's going to happen. And as I said before, with India, we have the opportunity to, attract these companies into manufacturing in different areas. So it's not, previously when you think about capex in India, you think of the L&Ts and the BHELs. I'm not saying they won't do well, because there will be expenditure in those areas as well for them to benefit. But it's a smart manufacturing hubs. It's going to be the smart kind of offices. So it lends itself to a different type of company, so the kind of Siemens, ABBs kind of, just fall into line in that kind of thinking. So that's one area which I think, we'll see a lot more interest going forward. And then if you are in this deflation camp, which we are, then at some point, the banks and discretionary spending again will be the ones which will be the big beneficiaries of that. So it's a little bit about timing. There's still a lot of moving parts, as we mentioned at the very beginning, but we think those are the kind of main themes which will play out in the current year. And one other, sector, as I said, was electronics, which I think could be very, very big. And I think I'm hoping to hear the government do more action or take more action in this on this front to benefit both Indian and foreign companies going into India.
Well, apart from the PLI scheme, what do you expect the government really to do to boost electronics? And also adding another question here, in the electronics, are you specifically liking any particular vertical, any companies? If not companies, then any particular sort of target vertical in there, like is defense electronics or particular sort of consumable electronics? Like what sort of electronics you're liking?
Yeah, I'd say it's evolving at the moment, Piyush, because if I say that India is going to start doing the electronics for, say, mobile phones or whatever it might be, that's going to be more India specific. But if they can start doing that, then why can't they export in the future? And this is the opportunity I think is going to be there. So I'd say if the government can just lay a little bit more emphasis with maybe, I'm not saying with better schemes, but maybe fast tracking some of these these areas, so it's easier to kind of set up and get business going. But even if they don't, there's the opportunity that Indian corporates, I think, will see and move into this area. So I'm kind of very, very kind of bullish on the electronics industry as a whole. Unfortunately, there's not many different ways to play it in terms of companies. So I think we'll have to see how it evolves and see who's capturing this opportunity in the next 6 months or so.
Right, but in that, there will be different types of companies. The companies where the market cap would be like less than $100 million or around $100 million, and there are companies like Dixon who have actually more than $500 million market cap. So what I'm trying to say is, you're playing the small cap, mid cap story, or you're playing actually the mid cap to large cap story?
I think it's going to lend itself to that kind of small mid cap, but you identify those companies which are will have whatever advantage they're going to be having. We'll take them from that small and mid cap company to the large cap company, and I think that's what we're going to see over the next 3 years. So.
Okay, and I want to actually get more clarity on the renewables. You've been liking it, and we've been hearing from you. On the renewables, how you're playing it out? Are you playing on the supply chain? You're playing on the financing? Which type of theme are you playing on renewables from a stock perspective?
Yeah, again, it's going to be across the board, right? I mean, it's going to be different parts of the renewable sector which you want to play in terms of the valuations. I think the policies are still a little bit vague to me, to be honest. To say I know that this company is going to be the real winner, or this bank is going to be financing all of it. So again, I think it's one where I know the capex is going to happen. I know that there's going to be themes playing out. But to identify exactly which company at the moment, it's a bit like let me put it differently. It's in all the electric vehicles that we're hearing about, who's the winner? And I think the jury's still out, and I think that's the same in renewables. I think the jury's still out in terms of where you're going to make the most money. So it's a theme that will play out, and I think let's see where the capex comes in and what companies are doing, because there's a lot of moving parts here. I haven't talked about hydrogen. It's going to be a big sector, but who is there to buy? How do you get into it? So I think these are the things that investors need to look at a little bit more closely than just taking a big sector view and saying renewables is the place to be. It's similar to the new age technology companies listed on the market. They're all different, but we tar them with the same brush. But I think everyone's got a different way of making money, if they are making money, and that's the kind of analysis you have to kind of continue to do. So I don't think it's a slam dunk on these, in these areas. Certainly, defence, there's very little, companies to play on, and it's very secretive. So you can never get to know order books until it's virtually executed. So it's going to be, I think, buying a basket of these stocks, I think, will probably be the way to play it.
Okay, and then now let's come back to the tourism theme, which you've been liking. You just mentioned during our conversation. How should we play that theme? Because again, that theme has two parts here. One is tourism, entertainment. This is all discretionary consumption. Again, in tourism also, we talk about there are companies like Thomas Cook, and there are more who actually are facilitating, and there is more about fee income for them. There are hotels which are asset heavy. There are some hotels which are asset light, which are only doing managements, and there are more examples of that. How actually are playing the entertainment theme overall, tourism and entertainment?
So I think the way we would play it is really through the hotels and obviously airlines is probably the two easiest ways of doing it. I'm probably more kind of comfortable in the hotel sector because airlines is fraught with kind of government intervention on oil prices, things which are outside of your control to some extent. Whereas if there's no kind of problems of people traveling going forward, then I think the hotel industry will continue to reap the benefits of not just tourism, people coming into India, which I think they will now, is obviously our own domestic travel. And if you've been to the airport recently, you'll know how early you have to go to make sure you get through those security lines. So I think that's something that will continue to my mind, because I think people have realize that actually India does have a lot to offer within its own country in terms of tourist sites. Rather than just go to you don't need to go to Switzerland for skiing. You can do it in India. You don't have to go to South Africa, Tabletop Mountain. There's many similar type of mountains in India. So there's many things that I think will happen over the next few years. But I think on the entertainment side, I think experiences is going to be where people will want to enjoy themselves more than just I'm going to a hotel or in the city and just do this. And I think that's what's going to be the differentiator for hotels as well.
Right, but in hotels also, like how you're looking at the smaller ones or the established, the branded hotels one. Like I'm just thinking aloud here. There could be Indian hotels, which again is pan-India. Very large in terms of size, market cap. Then there are smaller hotels which are geography specific, Western India only, Northern India only. Like how you're playing the overall theme here. Like you won't be playing the entire theme, so you would be actually looking at some granular criteria.
Yeah, so I'd probably stick to the the more broad-based hotel groups with coverage around the country. If I think about Indian hotels. And I'm just fast forwarding a few years out, but if I'm sat in the UK and flying to India on Air India, then I most likely would probably stay in one of the Taj hotels, right? Because there's packages you can put around it. So I think there's a long-term theme to be played out in India hotels. But because of the coverage, you're going to and the kind of different price points they have, I think they've got things pretty well mapped. To enjoy the operational gearing, which we've been seeing through their figures.
Okay, so that's interesting. We got some idea about the hotels here, and we also actually discussed the electronics defense. What do you like in consumption? That perhaps has been the sort of safe haven for many years in India. Large population, in fact now large young population. So on a consumption basis, what are you liking? Is it like the discretionary? Or you're liking the non-discretionary consumption within that bracket? What are you liking more?
So, if you take, say, FMCG, what we do know is people are still going to eat and drink and do that. So that's always going to, have, strong growth or stable growth over, many periods. It's obviously whether the margins are being hit by either overly aggressive advertising or input margins are going higher. So these are things that have a dampener in the very short term, but the growth is going to continue to be there. So there's no two ways about that. On discretionary, if you take, say, autos, they've had a great run and the valuations are looking a little bit high at the moment. And so I'm just watching the space because obviously there's a lot of interest on electric vehicles. I'm not sure who's going to be the winner yet. If it was a year ago, it'd be one company, and now it's changing overnight to another company. So the only beneficiaries I can see from this is the auto parts players. But I think that's probably where I'd look to kind of play that kind of whole shift at the moment, because picking the right one. It's like 2 years ago, Tesla was the only game in town, right? And we know what's happened there, and now there's competition as well, and it's starting to bite them. So these are kind of things which will happen. So I think it's an area which I'm keen on, but I think valuations are just a little bit high at the moment.
Yeah, same story. Like the auto parts suppliers, many of them have actually enjoyed 25-30% ROE, and the OEMs actually have enjoyed lower ROE. So as you're saying, again, it's almost same story getting played out. Moving to my last question, and trying to actually summarize everything what we've talked about as a takeaway for our viewers. If I want to actually take your top two strongest sectors, maybe any granular sort of observation, what would be the top two themes which we should carry forward for at least the first half of 2023?
So I think the two themes I would look to play would be deflation, because I do think that inflation has peaked globally now. It might be a little bit of a short-term hiccup because of China reopening, but I think if anything, China will want to kind of keep prices low to get exports going. So I see that that will help inflation going forward. So deflation is one big theme, and I think the other big theme is is going to remain around the kind of whole private capex cycle into areas where either the government is trying to encourage companies to set up business. There's a security supply chain problem, or has been, or there's an opportunity for companies to diversify away from China. And I think those are the themes which will play out. Now, it doesn't necessarily mean that you have to be across all different sectors. I think there's ways of playing it. I mentioned that, in terms of the capex cycle, some of the companies away from the traditional ones, which would be the beneficiaries. And I think things like defense and renewables is a little bit more difficult to play in terms of the the market exposure you can do. But do your homework on electronics. I do think it's going to be big.
Just one squeezing in one question here. If I'm thinking about deflation, the first thought comes to me is banks. Can I be bullish on banks then?
Yeah, I mean, listen, who am I to fight against Uday Kotak saying it's a Goldilocks moment for the banking? He's usually very conservative. So if he's seeing that opportunity, then and all the baggage is away from us. So we've got another 3 to 4 years before maybe that changes again. And I think the banking sector has had a good run. We're seeing some consolidation now, but I think Piyush, I think the pecking order of who you want to buy first has changed considerably over the past few years, because there's been many changes at the top of each of the banks in terms of the MDs and CEOs, and we saw that in the kind of IT sector over the years, and I think that will continue to be a theme. So I think it's not just saying as you could normally. And I'm not saying you're not going to get the returns from HDFC Bank. But I think it's not that kind of slam dunk investment anymore, because there's other banks stealing a march as well. And I think technology is going to play a big part here. So those are the other things you have to watch out for, because whoever's going to lead the march on technology is probably going to be the one that comes out the winner.
Well, how the viewers can really forget actually what happened in ICICI Bank stock after the sort of a big shuffling happened, and then over the last 2 years, we have seen again what the stock has done. But yes, that's an important point for the banking, which the viewers will take home. Andrew, like always, you have been very patient. You have answered our questions, and I think our viewers will take home a couple of themes from our conversation. Manufacturing is emerging out. Electronics is something which Andrew is really very bullish. Defense, renewables, he really likes, and the deflation is the one big theme he wants to play on. Andrew, thanks for the conversation and for giving us time. And with that,
thank you very much, and thank you for the opportunity as always.
Thank you. And with that, it's a wrap on the show. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.